Welcome once again to my channel, guys. So today we are going to be looking at the 75 index. Yeah, so if you've been following my videos on other indices, Roman cash, step index, today our focus is going to be on the 75 index. Just like my previous videos, price action and market structure is everything. And for synthetic indices that is not affected by world events, the technical analysis is going to be really stable because there will be no unexpected news to affect the flow of the market. So let's go into this. So my chart here, just have a naked chart and one indicator, the awesome oscillator. Actually, guys, we can actually do without this awesome oscillator, but I just put it there for some reasons. Maybe you get to know why later. I'll go to a lower time frame. Okay, so follow me. These are day one chart, right? Like we always do, the first thing you want to do is you want to begin a chart like this. You look at the chart like this. What do you see? Sometimes you can get a bit confused. Data can be very intimidating. You are not sure what to do. So at this moment, there are ideas you can apply. You look at the chart and you are just so you can't tell what the market is going. The first thing you should do, what I'm giving to you is premium. It's really huge. It's really huge. You should shrink your chart. Learn to shrink your charts. Guys, learn to do what? Shrink your charts. I have to say it over and over again. Learn to shrink your charts. Zoom out. Why do you zoom out? Zoom out so that you can see the market from a large perspective. So, and that's why you don't do this on small time. Do it, yeah, sometimes. But at this moment, we're talking about trading on the long term. So this is your daily charts. You now switch to a line chart. Line chart, I love this line chart. This market peaks and highs very, very quickly. So now, after shrinking our chart, you can easily tell now with the recent movement, you can tell that the market is on a bearish move. Very long time. That's bearish. So we are looking at previous data. Let's imagine that some of this market here, this whole place, has not happened yet. So remember my previous video, I talked about the one of the rules for using the trend line. You can watch that video to know what the rules are. So you click this thing, click your trend line, and you drag it down to connect to at least 2 peaks. As you can see, the peaks here. There's a peak 1, there's a peak 2. Once these 2 peaks are connected, then all you'll be waiting for the third peak price to retrace to the third peak. By the way, before I forget, when market is on a trend, dominant trend, and it starts to go against the trend, that's what we call a retracement. So we are looking at selling at a retracement when price retraces back to this level. This trend line is actually called the diagonal resistance. If it's below, it's going to be diagonal support. So since we are looking at the diagonal resistance before this level showed up, we are going to also use our horizontal line to make it tally. Let's imagine this line has not appeared here. So we are going to look at the previous support level, which is here, that showed multiple approaches. You can see the multiple approaches here. This is here. There's more than one. There's another one here. There is one here. When you change it to candlestick, you see a wick there, and it just goes on and on. Get the gist now. So let's map it again, and you can see how after mapping it based on the structure here, you can see how it tallies with this. That is why when it got to this level, it started to sell. Now again, aggressive traders will start go right ahead and sell order. stay there for a while. If you have too much money in your account, you decide to do it. But a conservative trader would rather wait, mark the zone out. This way, he or she applies a top-down market analysis. So you go to your 4 hours. Yep, 4 hours. Guys, we haven't changed here to candlesticks. And see the interesting thing about lines. It's already showing an M-shaped pattern. This is a reversal pattern. See, you see here, it's a reversal pattern. There are M's and there are W's, or sometimes they call it W. And this one is slanted. See, so we're going to change it to candlesticks, right? So that you get to see and expand it. So what are we looking out for here? We are looking out for the best place for to place a sell. Now, because it has been established that this is going to fall real good. So when should we place a sell? We don't want to enter too late. We don't want to enter too early. So I'm going to change this back to one chart. Then I will look for a place where there's also multiple touches, at least more than one. It's more than one. So two is just. So I'll pick my horizontal line. It's what I can pick. You see where the market moved where up, came down. This are 4 hours. I'm going to go to 1 hour and show you that something that will make you enter the market much earlier than 4 hours. So if you look at this point, see how price got to this level, was rejected, broke this level, came down, was rejected again, and went bullish, rallied up. So you can see how this level, here and right here, you can see how they tap. See guys, this is the market structure I'm talking about. You have to understand market structure, just like you talk about candlestick patterns. You need to understand chart patterns. This is why at the end of this video, or below this video, I'm going to leave the link where you can go read about market structure, understanding market structure, price action, anything that's related to making you understand how to be able to recognize the structures right there. I'm going to put the link there. And also, when you get to my website, you can also download free. It's free for now. Coming future, go for a price. So now we'll map that this level. Add one more, just one more, so that we can have like confidence. Yeah. So touches two, touches two, right? This sometimes it's not always perfect. I'm trying to find so one, two, this one is really aligned. That take this one. Okay, take this one too. One. This is one, two. This is another piece. This is another piece. This 3.2. So let's see what happens. Oh, see, when you broke through this level, there was a retest. At the retest, you can place yourself, and you can see how your retest tallies with your awesome state. Because it has been up all this while, and it went down below the zero. See how added price action and market structure to indicators. See, whatever you do, trading any financial instrument, indicators should be your secondary option. Your first option is understanding market structure. Then any indicator you choose to use on your charts will be like an add-on to your trading. It's going to be an add-on. It's not going to be your major source of where you're sourcing your data from. So I hope guys this was really simple for you to catch. Okay, they will make it easier. This is on the 4-hour chart. Before you start placing your entry on the 4 hours, let's go to 1 hour and see what 1 hour is saying. This is okay. Yup. I love this. Look at your 1 hour chart. I'm going to put my control Y now. Control Y. And you can see that this thing has spanned for days. Look at it. When you said it for days. See how long it took it. There was a consolidation here, guys. You can see this mark, this box. It's a consolidation. giving signals that the market wants to what? Wants to return. Now, there's something I forgot to mention. You see this moving averages you see here. They are just very simple averages. They are moving average 233, low. Moving average. You can pause the video to see the settings. Median, 233 shift, and same thing with this one. High. You can see visualization. I said it on minutes and hours. You can do whatever you want. So this moving averages is what we call the home base. It's actually useful specifically for 1 hour, lower time frames, not for 4 hours or daily. So that when prices are above this moving average, I would know that sooner or later price is going to fall, especially when it's in trend, when it's dominant trend. You're looking for a sell. Once it's above, you're not looking for a sell. So based on this, I'm going to change this to my line chart. At this consolidation zone here, so now what I'm looking at is, I told you it's not always accurate. I'm looking at the price to break in 1 hour. I'm looking at the price to break below the average 21, close, and go back, trace a bit. When it retraces, the second time it's coming to break these levels. That is when I'll place my entry, which is right here. Close to make you enter the market much earlier compared to 4 hours. So you can set enter the market here, then you go to 4 hours. When 4 hours breaks through the structure again, place another sell. So this is it, guys. Then you can now set your stop loss in 1 hour can be above moving average and above the structure. It's the structure here, so it should be above the structure. It should be above the market. Now watch how far your market will go. Then for taking your profits, about that, right? You can as well you can decide to take a profit this way. Take a Fibonacci. Show your Fibonacci bottom to the top, and you can decide to take a profit at the 100 level, which is here, is a support level, or you can as well wait and take profits at first reversals of 1 to 7. When you're setting this level, just take profit. Do not put it exactly on line, put it a bit above, because sometimes price when it gets to this level, and instead of it to go way down, to just start to reversing. So always put it. That's it, guys. There's one more trade. Okay, there's one more trade. Just one more trade. There's the more trade. Okay, you can see a movement here, right? This is it. Okay, you can see movement. First touch. It's the first touch. It's the second touch. This is the second touch. So here we go, guys. At the third touch, you're looking at what to buy, because right, the market is what? A short uptrend, right? Looking at this already, I can already tell you how far the market take it to Fibonacci, drag it from this highest point down to the place of entry. You can see how far the market got to the last reversal level. I don't want to be greedy. I will leave and take. I'll go out here. It's a daily chart. I'll go out here. Take that's enough. So let's see. Back to zone. Remember setting your horizontal line to be around the base area. Just 1, 2, 3, 4. See that? So actually back to candlesticks 4 hours. Let's see. Okay. Here we go. As I see, it's just about understanding structures. You see where this moving average comes in handy. You don't just trade based on these indicators. No, it's based on price action and market structure. Then you can now add indicator. You can see how price broke through this moving average and the volatility. This is 4 hours. I'd rather do this on 1 hour than 4 hours, but let me just show you something. When you change this to line chart again, you can decide to look for multiple touches here as well. Okay, yeah. 1, 2, 3, 4. So when price broke through the zone, you see the candle. This first one is almost like a fake out. I don't like it. I'll go for the second one, start to buy. But if you want to be sure of your trade, you also have to look at the 1 hour charts. See, 1 hour chart would have entered the market way earlier. See, this is a clean entry. This is a clean entry. I think this, what shape is this again? It's almost like a U-shaped. You can see how it's like a U-shaped formation. You can see it's like almost like cup. There's a chart pattern that's called cup and handle. This is actually a cup and handle. This is the handle here. Let me mark this out. You cannot draw cup shaped. It's like a cup. So it's like, just imagine that this is where you can hold the cup. So this, like, just follow the direction I'm giving right now. This is U, and this is the handle. Get, and it broke out of the handle. So, but either way, you might not have to wait to the shape to be formed. Right at the bottom here, right at this bottom here, the break of the moving average 21, the handle closes. You also find multiple touches here as well. You can see it here. 1, 2, 3. Then you decide to place it by. And at the break of the spot, place another by. So guys, I hope that is understood. So if you have stayed too long, just one more. You just give me a heads up. So right now, at this time, we are seeing V75. It's almost like a new formation is coming up again. We do not know what's going to happen, but it seems like it's going for another third touch. Okay, this is the first one. The second one, this may still be inaccurate, but let's just wait and see what happens. So guys, this is trading. I can see almost like a head and shoulder pattern here. Yeah, that's for the so it's head and shoulder there. Sell starting right here. So guys, you can see the head and shoulder pattern for our side. Decide to, after the break, at the formation of the second shoulder, you can decide to place yourself as it's falling below the 51. So guys, let's see this on this. Yep, see just around the base. So guys, that's how to trade V75. That's sorry, yeah, this is V75 index strategy. So guys, let me know in the comment below if there are some things that are not clear. To explain more, right? So I'll be sure of what I'm explaining to you in details to make you understand. Do well to like the video, share, subscribe. So, peace guys.